Hello. Thanks for joining us for the latest edition of our Markets at a Glance update. My name is Rashed Khan, and I am the Director of Risk and Portfolio Analytics at Westpath. For the second consecutive month, the U.S. Federal Reserve raised its benchmark federal funds rate by 75 basis points as the central bank continues to work to slow inflation. However, following the Fed's July meeting, Chairman Jerome Powell took a slightly less hawkish tone, hinting at a possible slowdown of monetary tightening. Meanwhile, investors digested a string of sluggish economic data. Inflation remained elevated, and sales of newly built and existing homes declined amid rising mortgage rates. Also, the Commerce Department reported that real U.S. gross domestic product, or GDP, declined at an annual rate of 0.9% during the second quarter. This marked the second quarter of declining GDP in a row, fitting many people's definition of a recession. On the other hand, the Labor Department released a positive employment report. The U.S. economy added 528,000 jobs, and the unemployment rate fell to 3.5%. We take a closer look at GDP data in our chart of the month. Here we see other major economies and how they compare to US. Despite an uncertain economic landscape, July was a positive month for both equities and fixed income. The S&P 500 gained over 9%, while non-US stocks rose nearly 4%, as measured by the MSCI All-Country World Index ex-US. Meanwhile, the Bloomberg US Aggregate Bond Index returned 2.4%. Investors were encouraged by the possibility of slower monetary tightening, as well as better than expected corporate earnings report. To read more about this news and to see how it affected our fund performance for July, please check out our latest monthly investment report.